Hello guys and welcome back to another episode of Pip Chasers. My name's Travis and I'm here to bring you episode 13. It's October, it's episode 13. It's kind of scary, but it is what it is. Guys, don't forget to like, subscribe, and don't forget to share this to someone interested in trading. Again, multiple Forex courses from ourselves, one-to-ones, the Forex care package where you can do it online yourself. You know where to find us. So I've titled this one, Impact of the Fall of DXY. Simply due to the fact that we're going to be mainly focusing on the DXY, and I'm going to emphasize how important it is to take into consideration currency indexes and the impact that they can take on multiple currency pairs. So in front of us, guys, we've got the DXY. So now I just wanted to show the importance of the level of the DXY right now and the impact it's had over recent years at this current level, and what I'm looking to expect and to see from this, and obviously how that reflects through multiple currency pairs. Now, if I just zoom into what's going on over the past couple of weeks, and again, from 3 weeks ago, we kind of had that shooting star around 99. Naturally, that did lead to 2 bearish weeks, with this week being a very, very significant week. As you can see here, we did have a heavy Marubozu candle, but the most important thing for me is that it's closed underneath our moving averages, both moving averages in one single week. Now, naturally, with Marubozu, we do know the significance of this being a very bearish candle formation. But at the level of 97.1, I want to see what's happened in previous history where we've had price close bearish underneath moving averages. So we're looking for a price that's closed bearish at 97, so this significant level, underneath moving averages. So let me just reset the chart. I've pointed out a few examples. Okay, so I've got a few examples. I'm just going to reset the chart and we're going to talk through a few examples of what price did around, give or take, the average of 97 and the significance of this. So starting here, perfect. We had a shooting star close underneath the EMA. Again, this is the price at give or take around 97. If you use the red dotted line, that shows where the price closed this week. So again, in and around that, shooting star closed underneath the EMA. What happened next for this pair? We had a very bearish week the following week, all the way down to 94s. Again, let's move across, looking for a closure underneath a moving average. Again, perfect, around the same price. You can use the red dotted line as an example. 97, close underneath the moving averages. The next following week was a very bearish level, very bearish move to the next key level. This was 96 in this example. If we keep moving across, perfect. So again, 97, hence why the dotted line. Price closed underneath the moving averages. This then led to a bit of consolidation, but naturally, ultimately, leading to the end goal of a bearish movement back down to 96 and beyond. Now, again, this is, again, for me, the same significance, and the candle formations kind of give me that extra confidence. Shooting star, close underneath the Marubozu. The Marubozu is closed underneath the moving averages at this 97 level again. For me personally, I'm looking for more bearish movements. That's my opinion. That's not gospel, but I would be looking for that bearish leg towards 96 again. Now, what's the significance of the DXY moving bearish? This then, for me, I'm looking at indications for currency pairs that have the DXY involved, and I'll be looking for a significant correlation in that sense. Let's move over to Australian dollar versus the US dollar, also known as Aussie dollar. Okay, guys. So what I've done is just on the monthly level at the minute, monthly time frame. So as you can see, price we're currently sitting at, give or take, around this monthly key level at 0.669, so 0.67. We haven't really hit those lows since 2008, 2009. So it's been on a very bearish market trend, as you can see, for a while. But as you can see, it's been almost, wow, it has been a decade since we've hit this all-time low. But let's look into, again, a weekly element, week by week, just how we have with the DXY. You can start to see that we're not looking to close underneath that monthly support, I should say, not resistance, monthly support anytime soon. Reason being is we have got multiple rejections off this level, 0.669. As you can see, made up of dojis, made up of rejections, long wicks, and obviously, as you can see, price is now starting to move to the upside. You could also call this, guys, as you know, to textbook, a double bottom here. So we kind of had the first rejection, spike up, hit a key level, more daily key level, nice and push back down to the downside, always looking for that double touch on a key level to give it some significance. And as you can see, this week's closure here has closed above the the EMA, sorry, with the EMA sitting underneath the candle now, I should say. And we've had a perfect, lovely Marubozu or hammer in this instance. Now, according to the DXY, we're looking to see more dollar weakness. Now, naturally, that's where I'd perhaps be looking to see a push to the upside, a push above my daily resistance, a push above this. I think this is also a weekly resistance on a higher time frame, and then naturally closing above that SMA, pushing towards higher targets up here. If you step back to the daily, this is a currency pair that I did jump into the end of last week. So I jumped in the London session on the Thursday. So I entered, I think, around just above my daily key level there. And I'm still running long, currently 50 pips in profit. And I'll be looking to work this towards the next daily key level, bank some profits. But again, for myself, I would be holding this, reacting to see what happens on this weekly trend, this daily trend line across the top here. As you can see there, I'll be looking to see what happens around this level before looking at any sort of long-term predictions of 0.70 and then the monthly of 0.70500. So again, great risk reward if you look at it on an overall perspective of 3 to 1, give or take. We're taking this step by step. But again, the closures on Thursday and Friday had that perfect morning star, beautiful morning star here, with the moving averages crossing over on the Wednesday, Thursday, leading into, you could say a Marubozu, but a strong bullish day on the Friday. So 2 great bullish days, which again goes in correlation very well with the weak US dollar. Again, got another example for you guys. The New Zealand against the US dollar. Again, this is one where we've kind of hit not all-time lows, but lows that haven't been hit since 2015. Again, we did have a few rejections just underneath the monthly resistance. But the most significant thing for me in this case is that the hammer, well, we've had a hammer to start off with form last week, but the hammer has finally broke above a moving average. As you can see, we could say perhaps we're still in a bearish trend. We could still say we're in a sideways trend because obviously we've still got this big candle here. However, we are starting to see some significant change simply due to the fact of price is no longer just sitting and riding underneath the moving averages. It's looking to make an impact, push to the upside with a hammer formation, closing above the EMA. As you can see, we had a nice second trend line touch there, and you could perhaps want to continue the downwards trend, but in a counter trend, working its way up to the monthly, the weekly, which is 0.65, and then slowly working towards a second trend, a third trend line touch maybe, and a break to meet the third trend line touch with the 0.67s beyond. If you step down to a daily time frame, for example, you could say it's possibly similar to Aussie dollar. Again, it's nice and clear that you can see another technical chart impact, perhaps with a inverse head and shoulders here. Just point this out to you guys. So lovely. The right shoulder always sits nice and low, closer to the head in regards to how low it goes compared to the left shoulder. So nice, beautiful formation. And then you could perhaps look to see this go long towards our our weekly key level and our monthly key level here. But again, beautiful bullish engulfing candle with the Friday being a nice bullish closure here. For me personally, I'm not currently in this trade just yet. I'm looking to see what it does around one of my daily resistances, which is a dynamic trend line here. If I just do that, guys, and bear with me, it will be a bit more evident on a lower time frame. So I have got this pink So this pink trend line was inputted there on a lower time frame. I have obviously actually had the break of this trend line before it hits these second key levels here, my second trend line key level here. I'll just do that. Excuse the discoordination with the colors, guys, but it's all about the technicals. Before I look for that 0.6440, for myself, possibly I'll be looking to see any breaks and retests before I can push to the upside, just to be on the safe side. Naturally, I'm already in my Aussie dollar, so I'm always looking for that great risk reward. We have had a nice, significant bullish trend, so it could be due a retracement. For example, let's just do that. A, B, if we do a C down here, and then we've got D, so we're perhaps already coming towards its D1 target already. So naturally, perhaps for myself, I could be waiting for any signs of retracements before jumping into this market. Could be perhaps come back into this zone and get this supply and demand zone here before pushing to the upside. But as you can see on the weekly perspective, we have had a nice bullish closure for the week. Get rid of that. So naturally, it could just continue booming towards that SMA and weekly key level. But for myself, I would be waiting for a possible retest just to get an entry on this pair. Another one you could perhaps look at is, that's obviously affected by the DXY, is USD JPY. So for myself personally, this is one that I trade quite heavily. So the previous week, people could have called that perhaps a bullish engulfing candle. For myself, I didn't. Reason being is, I don't know, just for me, because the candle didn't really close above that bearish wick. If you can see that there. Equal or just underneath, for me, it was still consolidating. And as you can see, going into this week, we did have it could have been a psychological thing where retail traders perhaps looked to push towards the upside, but as you can see, towards the end of the week, price closed back down, creating obviously a doji for the closure of the week. Now, that could have been due to the fact of this not being a fully bullish engulfing candle, market makers manipulating the price up before closing it back down, creating a doji. Now, DXY is looking weak, as we all know. If you look on a daily perspective, guys, let me just show you what's been happening over the end of last week. In all fairness, I've had my weekly resistance get hit. As you can see, since June, it has failed to break and close above this weekly resistance. And as you can see, over the past 3 days, Wednesday, Thursday, Friday, we did start to have that pullback on this currency pair. So for myself, guys, I have been short on this pair since Thursday night, Thursday closure at 10 o'clock. So currently running around 26 pips in profit. I would be trading this down to a next key level, which is 107,800 for myself personally, and then seeing what it wants to do in and around these moving averages. For myself, I would like it to come and push all the way back down towards meeting trend line 0.2, which is also a perfect key level around 106,600. But again, there is moving averages to take into consideration in and around the weekly time frame. So again, just taking daily key level to daily key level for myself. But naturally, this is what's so important about looking into the DXY, looking into the currency indexes that may be impacting your currency pairs, I should say. But again, you would want to get a nice risk reward. But again, I would be looking for potentially what would make me confident in this plummeting is a nice closure underneath this key level here. And you're most definitely looking for your daily key levels down there, and perhaps even further, depending what it wants to do when it meets this trend line. But again, guys, this just shows you how important it is in taking into consideration currency indexes. In this case, in this example, the tumble of the DXY. So again, as you can see here, guys, the DXY is just rocking. It's just rocking. It doesn't want to stop. I don't think personally, on a 4-hour perspective, it's still looking heavily bearish. 8-hour heavily bearish. Daily heavily bearish, and as we said, weekly heavily bearish. So something to look into, something to take into consideration. Guys, hope you've enjoyed this episode. If I don't speak to you before Halloween, have a great Halloween. But this was episode 13 to give to you guys. Take care.